After incurring several impairment losses brought on by the decline in cryptocurrency prices, the three biggest U.S. publicly listed Bitcoin mining businesses lost more than $1 billion in the second quarter. Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed, to make educated and timely decisions, and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here, we are building a community to help each other stay informed and make the most of our financial gains. In the 3 months that ended June 30th, Core Scientific Inc., Marathon Digital Holdings Inc., and Riot Blockchain Inc. all reported net losses of $862 million, $192 million, and $366 million, respectively. Following the approximately 60% decline in the price of Bitcoin during the quarter, other large miners such as Bitfarms Limited and Greenidge Generation Holdings Inc. were also obliged to write down the value of their holdings. Despite a recent uptick, the shares of crypto mining businesses are still down significantly for the year. To pay off debt and meet operating expenses in the most recent quarter, the miners were forced to sell some of the Bitcoin they'd been hoarding. Through the third quarter, that persisted. Public miners are still selling their Bitcoin holdings faster than they are producing them. According to a research report by arcane crypto analyst Jaran Mellered, July ranked second in 2022 for the number of coins sold by public miners with 6,200. The mining sector as a whole suffered last quarter. It was not just the miners. The biggest U.S. cryptocurrency exchange, Coinbase Global Inc., reported a $1.1 billion loss, whereas MicroStrategy Inc. also posted a significant loss of more than $1 billion. Top public miners created 3,900 coins in June, but sold 14,600 of them, according to Mellered. In June, Core Scientific sold about 80% of its coins to pay operating expenses and finance growth. In the same month, Bitfarms liquidated nearly half of its shares to pay off a $100 million debt. To stay solvent, the miners are selling their assets and mining equipment and taking on additional debt. Marathon expanded its current $100 million line of credit in July by adding a further $100 million term loan from cryptocurrency-friendly bank Silvergate Capital Corp. For another $58 million, the miner sold its mining equipment. With B. Riley Principal Capital II, Core Scientific has signed a common stock purchase agreement worth $100 million. Public corporations with significant Bitcoin holdings on their balance sheets have been warned by the U.S. Securities and Exchange Commission not to exclude price fluctuations when reporting results. Losses are not recognized until the tokens are sold. The cryptocurrency market appears to be gradually regaining its power after a challenging time that saw the values of many of its digital assets crash. This is alleviating the market volatility from public Bitcoin miners as the price of the first token approaches the $25,000 level. In particular, public miners sold 6,500 of their Bitcoin holdings in July, down from over 14,600 the month prior, when they were compelled to sell off their BTC on a large scale to maintain their operations. Before the Bitcoin hedge fund's eventual collapse, the now bankrupt Three Arrows Capital displayed indicators of poor management. According to a New York magazine, Kyle Davies and Suzu, the co-founders of 3AC, received backlash from banks and other dealers even before the business joined the cryptocurrency market. The Singapore-based 3AC engaged in currency exploitation, which enabled Zhu and Davies to profit from mispriced quotations from various brokers. Even if the gems were only a fraction of a penny on each dollar moved, in its early days of foreign exchange trading, New York Magazine claims the banks occasionally tried to get in touch with 3AC to cancel or modify the deal, but the company would say no. By 2017, banks allegedly started shutting off 3AC. We FX traders are partly to blame for this because we know for a fact that these guys were not able to make money in FX, a former trader told New York Magazine. But when they came to crypto, everyone thought they were geniuses. When 3AC switched to trading cryptocurrencies, it was successful by using the same currency arbitrage concepts. However, according to New York Magazine, when the business sought to sell its ownership in the cryptocurrency options exchange Deribit for an inflated $700 million price in 2019, investors began to notice something may very well be strange about the company. The investment's actual worth was just $289 million, and 3AC was trying to sell a piece of its investment at a significant markup, ultimately earning the fund a large kickback, according to reports. The co-founders of 3AC later boasted about the company's $2 billion investment in Grayscale Bitcoin Trust. but it appears that the firm waited too long to liquidate its holdings, causing its gains to disappear. According to New York Magazine, during a podcast produced by venture capital company Castle Island, Davies acknowledged that he understood GBTC's value would eventually decline and then requested that producers remove that section before the program went live, which they did. Additionally, 3AC placed significant bets on Terra and its sister currency Luna, both of which collapsed after splitting from their dollar anchor in May. According to Herbert Sim, a Singapore-based investor who followed 3AC's cash flow, the company's assets dropped from over $500 million to barely $604 in the wake of the collapse. Davies and Zhu acknowledged in an interview with the Wall Street Journal that businesses lost $200 million in investments, but they insisted that they had always been believers in cryptocurrency and still are. That is how we arrived here. Last month, 3AC declared bankruptcy, which led to the demise of cryptocurrency broker Voyage Digital. Sam Bankman-Fried, a crypto millionaire and the creator of the FTX exchange, accused 3AC of starting a chain reaction that led to bankruptcy filings or transaction freezes by crypto firms. They may make up 80% of the entire initial outbreak, according to Bankman-Fried, who spoke with New York Magazine. They did it far bigger than anybody else did, even though they weren't the only ones that blasted out. And before that, the environment had much greater faith in them. Lenders are unable to contact the co-founders of 3AC, who are rumored to be hiding. New York Magazine reports that there are rumors that the co-founders of the firm borrowed money from people associated with organized crime, which is why they appear to have disappeared without a trace. According to reports, 3AC transferred $32 million worth of stablecoins through the Cayman Islands, a nation where the ultra-rich frequently go to launder money due to lenient tax regulations. Zhu and Davies spoke with Bloomberg last month from a secret location where they revealed their plans to go to Dubai, a country without extradition agreements with the US or Singapore. The two leave behind a $30 million Singaporean villa that Zhu has already looked into selling, as well as a $150 million super yacht they dubbed Much Wow, in allusion to the DOGE joke. While Bitcoin has the support of millions around the world, we would ask for your support by liking this video and subscribing. It would greatly help us bring you current info to keep you informed on the ever-changing world of cryptocurrency. In anticipation of the eagerly awaited Ethereum merge update, which will alter the network's protocol for proof of stake, cryptocurrency exchange Coinbase has published guidelines. According to a blog post published on August 16th by Coinbase, the exchange will temporarily halt all Ethereum withdrawals and deposits until the whole merge migration anticipated for approximately September 15th is finished. The action is being taken as a preventative step. The exchange claims to ensure easy dealing of the asset and other ERC-20 tokens when the migration is over. The exchange recognized that Ethereum will provide consumers with a smooth experience following the shift. The company added that this downtime enables them to confirm that their systems have correctly reflected the move. The trading of ETH and ERC-20 tokens across all of their centralized trading products is not expected to be disrupted, and neither are any other networks or currencies. The crypto exchange also stated that the transactions would not affect any other assets. In addition, Coinbase warned that there is a strong likelihood that con artists will use the situation before the merge and urged caution. Ethereum is expected to undergo a full transition after finishing the Go Early testnet on August 10th by the crypto community. The upgrade is the last test run for the blockchain before switching from proof of work. It is important to note that the merge was originally planned for September 19th until the date was changed in a post by Vitalik Buterin, the co-founder of Ethereum. According to Finbold, the new date was established to set the number of remaining hashes for mining. Overall, investors' confidence in Ethereum has grown as a result of the merge, which is regarded as a catalyst for the asset's ascent. As an illustration, Mike Novogratz, the CEO of cryptocurrency investment company Galaxy Digital, stated that he views Ethereum's upgrade as a factor in luring investors to the asset. Well, that's a wrap on this video. So what do you think about the high volatility of the crypto market at the moment? Be sure to let us know in the comments below. Bye!